Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's look at some of the individual stocks that are on the move today here in Europe. I'm Caroline Hepker and I'm joined by our Bloomberg equities reporter, Chloe Millay. Chloe, good morning.
Good morning.
So thinking about European stocks, Adidas shares are down. Why?
So on the surface, the results from Adidas this morning were actually quite good. So the profit beat estimates that was due to strong demand for its retro sneakers like the Samba sneakers. We see those all over London. But this wasn't really enough to offset investor concern about two things in particular. So first of all, it reported weaker than expected revenue growth. So that was weighed down by the stronger euro and then also the end of the Yeezy franchise. And then secondly, and more importantly, it disappointed investors by only reaffirming and not raising its annual guidance. And that's obviously despite that uplift in profit during the second quarter that I mentioned. So that means that now the guidance actually sits below analysts' expectations. And the reason why the CEO didn't want to raise that guidance is because of that continuing uncertainty around the impact of US tariffs. He said that he expects the associated costs of Adidas products for the US to reach as much as 200 million euros this year. And of course, that could have a knock-on effect on consumer demand there. So that was the kind of reasoning for not raising that forecast. But that, of course, disappointed investors.
Gosh, I'm surprised that the Yeezy brand, the conclusion of that is still something that's weighing on Adidas. I mean, that's a really sort of old story, isn't it?
Yeah,
so
absolutely.
Quite interested in that. What about luxury names then? Shoppers are turning away from Kering's largest brand, Gucci.
Yeah, so in the luxury sector, we had Kering reporting, but also Hermes. And so this is quite interesting because we've seen, with those two, we've seen a continuation of the trends that we have seen over the last few quarters. So high-end luxury like Hermes is very resilient. If you can buy it Birkin bag, you can buy it whenever, really.
Well, you can buy anything, I suppose,
you can buy anything, even when the economy is not good. Whereas the more aspirational end of the market, so things like Gucci, they struggle a little bit more in terms of times of economic downturn. And so we saw that today. So Hermes revenue rose 9% in the second quarter and Kering revenue fell 15% in the second quarter. So we can see that divergence there. But the shares kind of responded in the opposite way. So Kering shares actually rose because the results were just not as bad as it was expected. And then also there's a fair bit of enthusiasm for the arrival of the new CEO, Luca De Meo, who's coming in September. There's enthusiasm and hope that he might turn around the fortunes of Kering, whereas Hermes shares actually fell because it's been trading so strongly and the earnings momentum just doesn't look strong enough, according to analysts, to kind of continue to justify such a high valuation.
Yeah, absolutely. And I mean, if you really want to be in with the in crowd, it's all about understanding what the new artistic director at Gucci, Demna, is going to deliver, and we're going to get first hints of that in September. But then the big reveal will be at Milan in March.
Yes.
So the fashionistas have told me. I won't claim to be one. Yeah, let's see. Okay. Danone says that sales also beat expectations. Activia yogurt and so on.
Yeah, so Danone, did really well this morning. Shares rose quite a bit. So volumes rose across all categories, but it was really led by high protein products. So it's really benefiting from the recent sort of protein trend. So that's driven, of course, by people on GLP-1s that kind of need those high protein products like yogurt, like dairy, etc. But then also just more generally health conscious consumers, and there's a real drive for protein products. Those results were kind of really a vote of confidence in the turnaround from the CEO Antoine de Saint-Affrique, who took over from the previous CEO in 2021, and that was following kind of a decade of stagnation for the company. So it seems like he's really turning things around. Another strong unit was the medical nutrition business. So that includes infant formula, but then also food for cancer patients and the elderly. That's been boosted by demand in China, and there's quite a good growth outlook because of the aging population. So that's interesting to look at. Yeah. And one negative spot was the water category. So Evian and Volvic, apparently people don't want to buy it.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.